Welcome back. Well, the markets are not in a very happy mood, but at least it appears to have found a bottom at 10,800. We're just beginning to see a little bit of resistance to falling at that level. It's still red for Sensex, Nifty and mid-cap. But the intensity of the red in the mid-caps has definitely recovered. It was down 0.5% at one point in time. Now it is in flat terrain. The Nifty Bank also was in the red. It is now 0.33% higher. So the dip is at least attracting long positions. Let's see if it's a trending higher market from here on. One person who's been bullish after the announcements has been the brokerage Nomura. It has upgraded Indian equities to overweight, and they believe it is time to raise allocation to India on the back of positive local developments amidst the rising global uncertainty. Chetan Seth of Nomura, the author of this report, joins us on the phone line. Chetan, good morning. Thanks much. Well, the markets actually sold the rally. Would you still retain your bullishness, and which sectors would you be bullish on?
So thanks for having me on your show. So yeah, I mean, we're not going to change our view within a day. I mean, we're taking at least a 3 to 6 month view on India. And again, when we say we are bullish on India, all we are trying to say is that if you're a regional equity investor looking at AEJ or EM, the prospects of Indian equities relative to other markets in the region are looking brighter in our view. So, we are positive, and there are a couple of reasons why we decided to actually change our view over the weekend. One was obviously rising trade tensions, which in our view could actually impact, the more open-ended economies in North Asia more than the kind of, domestically exposed economies and countries like India. That was reason number one. And the second, obviously, was the move from the finance minister on Friday evening, which we think is quite positive, at least from a sentiment perspective. So in terms of sectors, as a house, we generally like banks. We also like select insurance companies, and we also like select infrastructure plays.
Okay. Chetan, hi, good morning. So from the finance minister's statements, what are the top 2 or 3 announcements you think could genuinely boost demand and not just sentiment?
So, I think, it remains to be seen how these measures can actually boost demand, right? I think in the short term, things might not actually change a lot. But, I think what the finance ministry has tried to do is, they've basically clearly shown us that they have positive intentions to make sure that the decline in, India's GDP is quickly arrested. They've also focused on kind of more softer reforms, in my view. So the impact, or the positive impact of these moves should actually, come through in the next few quarters. So I won't say that these measures per se will actually boost demand, but it just shows you the government's intentions are there. There's a resolve amongst the government authorities, and hopefully it should feed into positive broader sentiment.
Okay. Well, Chetan, the stocks that you have a buy on, I saw ICICI Bank, I saw some insurance companies in your list. These were buys anyway, even before the measures were announced. SBI was in everybody's list, ICICI Bank was in everyone's list, ICICI Pru was in everyone's list. What's changed? Have you added anything positively because of the Friday announcements and expected announcements?
Yeah, so the stocks, you're right, haven't really changed a lot. There's been minor change, but, all we are saying is that, actually we've been neutral on Indian equities, since Mr. Modi got re-elected, which was back in May. And one of the reasons why we were, actually a couple of reasons why we were neutral or cautious was, one, we were quite worried about growth outlook, earnings outlook, and also the valuations of the market, right? So now what we are suggesting suggesting is that I think we've seen India actually underperform Asian equities by around 9-10%, since elections. So it's just time for our investors to actually raise allocations to Indian markets. And what we are suggesting, it's the same set of stocks. It's just that we are asking them to actually put more money to work in India and maybe move money around from other markets in the region.
Okay, Chetan, so what is your view that equities generally in Asia will do badly and India will be the outperformer? Or are you expecting a net return on equity in India?
Okay. So good question, and I think that's a very good question. So I mean, if you look at our index targets for AEJ, which is Asia ex-Japan Index, our base case target for end 2019 is actually still lower where the market is. So to answer your question, we are still very cautious on equities. I would say there's probably even some more downside to our index targets. So we are quite cautious. So we are not saying that India will give you positive returns over the next 3 to 6 months, because things definitely, as you see, regional markets, they're not looking so great. But if you want to be defensive, if you want to protect your portfolios, India is probably one place to look at.
So, Chetan, before we let you go, what's your view on autos? I didn't notice it in any of your positive list. You're not convinced with the measures that have come out?
Yeah, so our team's view, and I don't specifically cover auto stocks, so I cannot comment on the details, but the view that we have from our team is, fundamentally there could be very little impact on earnings, and that's part of the reason that's part of the reason why we're not pushing auto stocks. I mean, but I do acknowledge that stocks might actually go up, a couple of days because of positive sentiment, but earnings might actually not come through.
Okay. All right, Chetan, we will leave it at that. Thank you very much indeed for joining us with your thoughts. So, relative outperformance from India, but stick with the same financials, the ICICI banks, the SBIs and the insurance companies. That's the word coming from Nomura. You will make net gain in India, probably. That's the hope. But at the moment, the net gain is not coming, at least in fistfuls. All the indices are in the red, only barring the Nifty Bank, which visited the red but is up about 1/3%. The bulls still have a minor advantage. We have to see whether the dip that we saw around 10 a.m. is going to be brought sequentially and after London opens, when usually you see the sentiment changing. Let's wait and see. At the moment, it looks like there are trades on the red and the green, and they will come to you on Chartbusters. As we say goodbye to you, let's leave you with some thoughts on what the markets have made of the FM's relief measure. We spoke to several experts.
The finance minister addressed three things very, very categorically. So I think there were three concerns in the market. One was basically changing the sentiment. So I think the FPI change which she has done, actually, I think that will definitely change the sentiment in the market. So it will at least not give a reason for FIs to go out and sell more. I think the second thing has been she's addressed growth through various measures, whether it is putting the 70,000 crores up front in the PSU Banks or the stops which have given to the auto market. And the third one is the addressing the liquidity. And I think she has done it successively. For the last, in the budget, she has addressed the liquidity, and again, she has addressed the liquidity through various measures. So I'm very sure, basically, I think this sort of forms a very good bottom for the market.
Okay. Vikas, unfortunately, the measures to boost confidence and to give the FPIs a genuine benefit of lower taxes if they come as trusts is getting negated in this situation because Trump has decided to ask American companies to move out of China. So this is coming at a time when sentiment is rather sour. So give me your view as a trader. Do you think we have enough spunk to cross 11,000 and remain sustained over 11,000 for the week?
Lata, I think you have to understand these are the things which are from a long-term perspective.
Yes.
More importantly, I think Finance Minister, in my opinion, has won the trust of the market that she is concerned about it. She is caring, and she will come back with more, and that is more important. It's a comprehensive package to revive the economy, and I think one important point which I think most of us have been missing out. I think two subtle points which she has put out. One is that putting money in the hands of SME. Through refunds, and that's a very, very critical thing. And secondly, I think by giving some sort of immunity or structure where bank officers can freely lend to the companies, taking the fear away. And these are the measures which, if they implemented well, I think will kickstart or address the credit problem. India never had liquidity problem. We had a supply of the credit flowing into the system, and that will start happening, I would believe, with these kind of measures. And I think she would probably monitor this more aggressively, and I think this is very, very interesting measure. Now, as regard to trade war, this is nothing new. It's been going on for odd years, and I feel that it is still probably going on for a long time, because these kind of adjustments would never happen overnight. There are rhetorics, there are realities, and I think in between markets kind of keep playing out. We have seen historically that the trade wars have not had much impact on Indian economy as such. In fact, to some extent, we are insulated and also are presented with an opportunity to build our manufacturing export base. Of course, that can't happen overnight, but in some sense, directionally, it puts in that context. So I would say that, but for the worry of currency movement little bit, markets would go back and focus a lot more on domestic economy than really the international worries. But having said that, it's very difficult to predict or expect what happens on a particular day. But I directionally see this as positive, and I see probably what prices we have seen in Indian markets, in the recent past won't be seen.